The United States currently owes trillions of dollars in debt, and a significant portion of that money is owned by other countries. Japan alone owns more than $1.1 trillion of U.S. debt. The United Kingdom owns hundreds of billions. China owns hundreds of billions more. Even small financial centers like Luxembourg and the Cayman Islands hold massive amounts of U.S. government debt. This is not a theory. This is not a prediction. This is the current global financial system. Today, we are going to break down exactly how much money the United States owes to other countries, who those countries are, and why they keep lending money to the United States. First, we need to understand what it actually means when we say the United States owes money to other countries. This does not mean the United States borrowed money like a person takes a loan from a bank. Governments borrow money in a different way. The U.S. government borrows money by selling something called Treasury bonds. These bonds are basically IOUs. When someone buys a U.S. Treasury bond, they are lending money to the U.S. government. In return, the U.S. government promises to pay them interest and return the money later. Countries, banks, investment funds, and central banks all over the world buy these Treasury bonds. They buy them because they are considered one of the safest investments in the world. So when we say countries own U.S. debt, what we really mean is that they own U.S. Treasury bonds. Now there is something very important that most people do not know. The United States does not owe all of its debt to other countries. In fact, most of the U.S. debt is actually owed to Americans. It is owed to Social Security funds, pension funds, banks, mutual funds, and the Federal Reserve. Only a portion of U.S. debt is owned by foreign countries, but that portion is still several trillion dollars, which is why it matters. Now let's talk about the countries that own the most U.S. debt. The largest foreign holder of U.S. debt is Japan. Japan owns about $1.1 trillion of U.S. Treasury bonds. Japan has been the largest holder for many years. Japan invests heavily in U.S. debt because it needs a safe place to store its money. Japan exports a lot of goods to the United States, and it receives dollars in return. Instead of converting all those dollars into Japanese yen, Japan invests those dollars into U.S. Treasury bonds. This helps keep Japan's currency stable and supports its economy. So the financial relationship between the United States and Japan is very strong. Japan depends on the U.S. economy, and the U.S. depends on Japanese investment. The second largest foreign holder of U.S. debt is the United Kingdom. The United Kingdom holds around $866 billion of U.S. debt. London is one of the largest financial centers in the world. Many global banks, hedge funds, and investment firms operate through London. A lot of international money is invested into U.S. Treasury bonds through financial institutions in the United Kingdom. So the UK appears very high on the list because it acts as a global financial hub. Next is China. China holds around $683 billion of U.S. debt. China used to be the largest holder of U.S. debt many years ago, but Japan later took the top position. China's situation is very interesting. China exports huge amounts of products to the United States. When Americans buy products made in China, China receives U.S. dollars. China then takes those dollars and invests them into U.S. Treasury bonds. This creates a financial cycle. The United States buys products from China, and China lends the money back to the United States by buying government bonds. This system has existed for decades and is a major part of global trade. Next on the list is Belgium, which holds around $477 billion of U.S. debt. Belgium may seem surprising, but this is mostly because many European financial clearing systems and international investment institutions operate through Belgium. So a lot of international investments into U.S. debt are routed through Belgium's financial system. After Belgium comes Canada, which holds around $468 billion of U.S. debt. Canada and the United States have one of the largest trade relationships in the world. The Canadian economy is closely connected to the U.S. economy. Canada holds U.S. Treasury bonds as part of its financial reserves because they are considered safe and stable investments. Next is Luxembourg, which holds around $435 billion of U.S. debt. Luxembourg is a very small country, but it is one of the biggest investment fund centers in the world. Many global investment funds are registered in Luxembourg, and these funds invest heavily in U.S. Treasury bonds. Then we have the Cayman Islands, which hold around $421 billion of U.S. debt. The Cayman Islands are a major offshore financial center. Many hedge funds and global investment funds are registered there. These funds invest heavily in U.S. government bonds, which is why such a small place holds so much U.S. debt. Next is Ireland, which holds around $340 billion of U.S. debt. Ireland is another major corporate and financial hub. Many multinational companies are headquartered in Ireland, and investment funds base their invest heavily in U.S. Treasury bonds. Then we have Switzerland, which holds around $294 billion of U.S. debt. Switzerland is known for banking, wealth management, and financial services. Swiss banks and investment funds hold U.S. government bonds for investors and institutions around the world. Finally, France holds around $268 billion of U.S. debt. France holds U.S. Treasury bonds as part of its foreign currency reserves. Many European central banks hold U.S. bonds because they are safe, liquid, and easy to buy and sell. Now the big question is why all these countries lend money to the United States. Why would countries lend trillions of dollars to another country? There are several reasons. First, U.S. Treasury bonds are considered very safe. The United States has one of the largest and most stable economies in the world. Second, the U.S. dollar is the world's reserve currency. Global trade is mostly done in dollars. Countries need dollars to trade oil, buy goods, and conduct international business. Third, U.S. Treasury bonds pay interest, so countries earn money by holding them. Fourth, the U.S. bond market is the largest and most liquid financial market in the world. Countries can buy and sell these bonds very easily. So countries are not lending money to the United States to help America. They are doing it because it helps their own economies and financial systems. Now another important question is what would happen if countries stopped buying U.S. debt. If countries suddenly stopped buying U.S. Treasury bonds, the U.S. government would have to offer higher interest rates to attract buyers. Higher interest rates would make borrowing more expensive. Government spending might have to be reduced. Taxes might have to increase. The value of the dollar could fall. Financial markets around the world would react. The global economy could slow down. This is because U.S. debt is not just an American issue. It is deeply connected to the global financial system. Many countries depend on the U.S. dollar, U.S. bonds, and the U.S. economy. In reality, the global financial system is built on a cycle. The United States spends money and imports goods from other countries. Other countries receive dollars. Those countries invest those dollars back into the United States by buying treasury bonds. The United States then uses that money to continue spending, and the cycle continues. This system has been running for decades. It connects governments, banks, investors, and economies all over the world. So when people ask how much money the United States owes to other countries, the answer is not just a number. It is a system. A system where countries lend money to the United States, and the United States drives global trade and finance. The United States owes trillions of dollars, and countries like Japan, the United Kingdom, China, Canada, and many financial centers around the world hold that debt. But this is not just a story about borrowing money. This is a story about how the global financial system works. The world lends money to the United States, and the United States spends money across the global economy. As long as this system continues, the global financial system continues to function. The real question is not how much the United States owes. The real question is what would happen if this system ever changed. And that is why U.S. debt is not just America's debt. In many ways, it is the debt that connects the entire world economy.